Hello friends, a very warm welcome to my channel. In this video we are going to talk about IDFC First Bank, which is one of the favorite in the smaller banks in India. There were a lot of queries about this particular bank for a very long time. We have already made a video about this, a complete fundamental analysis a couple of years before, and now this is a review video. So if you're new to the channel, please do subscribe and hit the bell icon, and if you're not a part of our Telegram channel, do join today as we discuss everyday morning market analysis and a lot of interesting news during the day. Please don't consider this as a recommendation. This is only an analysis video for an educational purpose. So let's get started. So this will be the flow of our presentation. We'll start with understanding a business model of the bank in brief. We'll look at the chart performance of the stock in the last couple of years. We'll see how is the financial performance of the bank, the main parameters. What are the reasons which are leading to the rise in the stock price of this bank? What is the outlook which the management is giving going forward? How are the valuations now? Then what are the risks involved in investing in this particular stock? And what is the view after considering all these factors? So earlier there was an NBFC called Capital First and a bank called IDFC Bank. Both of them merged and formed IDFC First Bank. And earlier their business was mainly into institutional lending, and which is completely now transformed into retail lending focus. In the last 3 years, the retail deposits have grown by almost 84% CAGR, which shows that the management is completely focusing on the retail business now. And the quality of the assets of the bank has been improving over a period of time, and the gross NPA now is about 1.65% and net NPA is about 0.55%, which is very good. In terms of technology, they have been taking new initiatives, launching new apps, and several other technologically advanced steps have been taken. As a personal user in one of the accounts in my bank also, I have seen the app developed and improvised over a period of time. When you look at the stock performance, it was trading at somewhere around 75-80 earlier, which fell down to almost 20 rupees during the COVID times, and now it is back to the earlier highs and trading in the all-time high zone of about 80 rupees. This is a critical juncture for the stock. If the good performance continues in the coming couple of quarters, it is expected that this stock rally will continue, and the stock will give another all-time high, provided the market remains stable. Especially in banking sector, the stock performance also depends on the sector performance, as most of the banks move together. Hopefully, the good financial performance of this bank is expected to continue, and if the market remains stable, there is a high chance that this will further give a breakout from these levels. When you look at the main financial parameters of this particular bank, the loans and advances compared to last year have grown by almost 24%. The customer deposits have grown by 47%. The CASA ratio has improved from about 48.5 to almost 49.7%. The gross NPA has improved from about 3.7 to 2.5%. The net NPA has improved from 1.5 to 0.86%, which is less than 1% now. In terms of profitability, as the economies of scales are playing in, profitability is showing a huge upturn from just about 1.145 crores. The profitability has shot up to almost 2,500 crores in this year. The return ratios have also improved from just about 0.75% to almost 11% now. So this shows that year on year, the financial performance of the bank has shown a sharp improvement. If you look at the last 5 years growth in the net interest income, it has grown by almost 27% CAGR, which is very good. In terms of pre-provisioning operating profit, it has grown faster than the growth of the assets in the balance sheet. By looking at these parameters, you understand that the asset quality of the bank is improving as well as the performance is improving. So just because the performance is improving, there is no compromise on the quality of assets, which is very important in the banking business. Now, what has led to the rise in the share price? The management of this company has a very strong track record. Mr. Vaidyanathan has built such a business in Capital First, which is now replicating in IDFC First Bank. So his track record has been good, and the same continues in IDFC First Bank also. And whatever they have guided in the long term, the performance is on track, and a lot of the targets are achieved before time also. In terms of tailwinds, the interest rates are rising and the Indian economy is growing very fast compared to the global economies. So as a sector, this is a sunrise sector at the moment, and for the next decade also, banking is expected to perform very well. So that is helping the company to perform better. And the asset quality is also maintained, as the bank is focusing more on the retail business, and the gross and net NPA ratios are improving every year. When you look at the growth outlook, the bank is looking at now developing different streams of revenue, like they are now focusing on developing the wealth management business also. The CASA deposits have in the last 4 years have grown by CAGR of about 74%. So by this, the banks get deposits at a lower rate. The customer deposits have grown in the last 4 years at a CAGR of 36%, and now almost 76% of the total deposits are from retail. So the bank has transformed itself from institutional to the retail banking sector. So this is the growth outlook or guidance given by the management for FY24 and 25. Most of them is already achieved, and the rest is on track. So the capital adequacy ratio was targeted to be maintained above 13%, which is around 17% now, which is on track. The CASA as a percentage of deposits were earlier 8.7%, and they were expected to go above 30%, so they are almost near 50% now, so which is almost achieved. The number of branches were earlier 200, and the target was about 800 to 900. So they have already crossed 800. So like this, if you look at most of the parameters, the growth, whatever outlook the management has set, the target for FY24 and 25, most of it is on track. In terms of asset quality, they were targeting to maintain the gross NPA between 2 to 2.5% and net NPA around 1 to 1.5, which is already achieved, as gross NPA is about 2.5% and net NPA less than 1% now. The return on equity earlier was negative, which was targeted to be maintained between 13 to 15%, has already reached nearly 11%. So this is also on track. So by this you can understand that whatever the guidance the management is given, the performance is at par. The sum of the targets are already achieved, and the rest are on track. Now when you look at the valuations in terms of price to book ratio, it is trading at an all-time high. So as an individual company, if you see, the valuations look fully priced in, but if you compare it with the peers, the other banks in the same sector, these valuations at somewhere around 2.2 price to book seem also to be reasonable. So if the performance continues and the asset quality is maintained, then these valuations are also justified. What are the risks if you choose to invest in this company or this bank? There is intense competition in this sector with the new NBFCs coming in, the new fintech companies, as well as the old existing players. If the macros don't support, if the local and the global macros are not in favor of this sector, there could be underperformance. There is high dependency, as far as I feel, as a personal opinion. Although the work is already delegated and structured, there is dependency on Mr. Vaidyanathan, who is the torch bearer in this bank, and his shareholding in the bank seems to be very low. So that is a risk to me if you invest in this particular bank. And if the performance is deteriorating going further, if this track record is not maintained, then that is a very big risk. Now, considering the business model, the growth outlook, the performance valuations, what is our view on the stock? If you're already holding the stock, either you continue to hold as the performance is intact, or most of the majority of the position you can retain, and a small portion you can churn as per the sector cycles. And if you are a new investor who wants to invest in this bank, then you should gradually accumulate on dips. As in terms of valuations, the stock is not undervalued now, but the future seems to be bright for this bank. So that's about IDFC First Bank. I hope you like the analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention those names in the comment section. I will surely consider for them upcoming videos. Don't forget to join our Telegram channel. Thank you for watching and have a wonderful day.